It's always interesting, isn't it, when a big name like Porsche announces a strategy shift, especially with something as, well, fundamental as their electric vehicle plans.
Oh, absolutely. It looks like quite a significant recalibration they're signaling. And it's a really fascinating case study, actually, a great way to look at just how complex the whole auto market is right now.
So that's what we're doing today, right? A deep dive into this. We're looking at their revised battery strategy, using their latest financials, we're calling them Calpurnia notes, just for us today, and some initial analysis we've seen.
Exactly. The mission here, if you like, is to really unpack why Porsche is adjusting things. And crucially, what does this mean for luxury EVs going forward?
Because honestly, when this news first surfaced, it was a bit surprising. Makes you want to dig in and see what's really driving it.
Definitely. And to get that story, you really have to start with the numbers, the sort of financial reality check. Q1 2025, it paints a picture.
Okay, let's get into that.
Okay.
So global deliveries, they dipped in Q1 25 compared to last year.
Yeah, down to 71,470 from about 77,460. It's noticeable.
But the real headline seems to be China, a 42% drop. That's massive.
It really is, especially when you contrast it, like you said, with North America seeing, what, 37% growth?
Right. That regional difference just jumps out at you.
Yeah.
China's been such a crucial market.
Absolutely vital. So a drop that big, it definitely makes you ask questions about what's happening there specifically and how that ripples outwards to their global strategy.
And it's not just deliveries, is it? The financials themselves.
No, exactly. The core figures tell more. Quarterly revenue was down about 1.7%.
Okay, 1.7%. But the operating profit figure, that's the one that really catches the eye.
That's the kicker, a 40.6% plunge.
Wow, 40%. That's not just, a small adjustment. That points to some serious pressure somewhere.
Serious pressure, yeah. And when you see a profit drop like that, it inevitably means you have to revisit your forecasts for the whole year.
Which is exactly what they've done for 2025. So revenue projection is now, what, 38 billion, down from 40 billion.
Correct. And the operating margin forecast is also cut pretty significantly. They were hoping for 10-12%. Now it's revised down to 6.5, 8.5%.
Okay, that's a major reset of expectations. So the big question then is why? What's causing all this? It's probably not just one thing.
No, almost certainly not. It's likely a mix of factors converging. But a key theme seems to be a sharper slowdown in demand for luxury EVs than perhaps anticipated.
And China seems central to that part of the story again. We saw reports like a 30% sales decline there in the first 9 months of 2024.
That's right, a significant decline. And the analysis suggests a couple of big reasons within China. One is just, well, intensifying local competition. The Chinese EV market is incredibly fast-moving, very competitive.
Yeah, you hear that a lot. Lots of strong domestic players.
Exactly. Combine that with a more general economic slowdown impacting consumer spending in China, it just creates a much tougher environment for premium brands like Porsche.
And then there are external factors too, right? Like the U.S. tariffs on European cars. Did those start biting around spring this year?
Seems so. Around April, May, they likely started adding pressure to margins in the U.S. market.
So another layer of cost.
And another factor mentioned is the devaluation of used electric Porsches. If resale values drop, that can definitely impact how people feel about buying a new one. Makes the total cost of ownership look, well, less attractive.
Makes sense. And what about their specific EV models? We heard the electric Macan maybe had a slower start than hoped in some places.
Yes, reports suggest a less than stellar rollout initially in some markets, but the really stark figure is for the Taycan.
Ah, the Taycan. Their sort of electric halo car, right?
Pretty much, yeah. Their electric symbol, you could call it. And sales for that apparently dropped by 50% in the first 9 months of 2024.
Ouch. A 50% drop for the Taycan.
Yeah.
Yeah, that would definitely trigger a rethink.
You'd have to assume so. When your flagship EV underperforms like that, it forces a strategic look at everything, which leads us neatly into their battery strategy and specifically Cellforce.
Okay, Cellforce. This was their big bet on high-performance in-house batteries, right? Meant to be a tech advantage. But now they've paused the expansion.
Essentially, yes. The autonomous expansion program for Cellforce Group is suspended. It signals a shift away from that purely in-house vision.
So what are they doing instead? Looking at partners.
Well, they're evaluating a majority stake in a company called V4 Smart GmbH, which suggests maybe a more collaborative approach or looking externally for some tech.
And the plan to build, 20 gig of Cellforce capacity?
Yeah.
That's on hold too.
That seems to be frozen for now. The focus has shifted towards finding industrial partners to share the, frankly, huge risks and investments involved, or even potentially selling Cellforce.
Wow, selling it. That's a big change from building it up as a core asset. It really makes you question the economics of vertically integrated battery production for automakers, even premium
It
ones.
absolutely does. It
Yeah.
looks like a very pragmatic response to the market headwinds and the financial pressures we just talked about.
And this ties into their overall spending too, right? The extraordinary expenses forecast for 2025 went up.
Significantly, from an initial 800 million up to 1.3 billion now, and a good chunk of that increase is linked to write-downs and accounting adjustments related to Cellforce.
Okay, so a major rethink on batteries. How does that translate into their actual car strategy? Are they backing away from EVs overall?
Not pulling back completely, no. It's more about flexibility, building in more options. They're actually sticking to their target for 2025, aiming for 20-22% of sales to be battery electric vehicles.
Okay, so the near-term target holds, but what about longer term? Didn't they have that ambitious 80% electric goal by 2030?
They did. But that's the part that's been, let's say, modified. It's not an unconditional target anymore.
Modify how?
Now, hitting that 80% depends on market demand and what they call enabling conditions.
Like charging infrastructure, government incentives, that kind of thing.
Exactly. So it's become a much more market responsive goal. If the demand and conditions are there, they'll aim for it. If not, well, they're not locking themselves in.
That sounds, well, pragmatic, given everything we've discussed. And it seems they're also doubling down on their traditional engines, extending life cycles for the Cayenne, Panamera, even the 911.
Yes, that dual powertrain strategy seems much more central now, keeping ICE and hybrid options going for longer.
Which suggests they see pretty solid demand for those continuing for a while yet.
It strongly suggests that, yes, a recognition that the transition won't be uniform across all their models or all regions. Look at the new Matan, for instance.
Right, you mentioned that. The electric one is only for Europe initially.
That's the plan. Outside the EU, they'll continue offering the traditional engine versions. It's a very clear example of tailoring the strategy market by market.
Very targeted. But they haven't given up on all electric commitments entirely? What about the 718 sports car?
No, that's still confirmed as electric only for the next generation. So for certain segments, the commitment to full electrification is definitely still there. It shows they still believe in EVs for specific types of vehicles.
Okay, so if we zoom out a bit, does Porsche's situation seem like part of a bigger trend? Are other premium car makers seeing similar things?
It certainly looks that way. You hear similar noises from Mercedes, from Renault, an acknowledgement that this transition to electric is probably going to be more gradual, more market dependent than maybe everyone thought a couple of years ago.
So this idea of production flexibility, keeping both EV and ICE options available, it's really a response to that uncertainty about demand and definitely about protecting margins.
Precisely. And, it also highlights the underlying strength of the Porsche brand itself. They have that loyal customer base, and they've shown they can adapt strategically when conditions change.
Right. So wrapping up the core message here, the revised battery plan, pausing the big Cellforce expansion. It all seems driven by that weaker than expected EV demand, margin pressures, and maybe a tricky geopolitical and economic climate overall.
Yeah, I think that sums it up well. The focus shifts to flexibility, partnerships to share risk, and just a more realistic, perhaps cautious view on the medium-term EV targets.
A strategic recalibration, as you called it, grounded in the data.
Exactly.
So the big takeaway for you, listening in, is probably that this whole luxury EV transition, it's not a straight line. It's turning out to be much more complex, much more varied, depending on where you look in the world, than maybe the initial hype suggested.
That's a really key point. And it makes you wonder, doesn't it? Is this just a temporary blip, tied to current economics? Or is it actually a sign of a deeper rethinking about how fast the high-end car market really will go fully electric?
Yeah, because there's so many moving parts. Battery tech keeps changing, costs go up and down, infrastructure build-out is patchy, government policies shift.
Yeah.
It's incredibly hard to predict.
Absolutely. The level of uncertainty in the auto sector right now is just immense. It's going to be fascinating to watch how Porsche and everyone else navigates this over the next few years.
For sure. The whole landscape is just constantly evolving.
Yeah.
Porsche's adjustments are just one, albeit very significant, glimpse into the kind of strategic thinking happening right at the top. Thanks for breaking that down with us.